Okay. Good afternoon, Munish sir. I am Mohit this side from IOV RVF.
Yes, good afternoon, Mohit.
How are you, sir?
Good.
Great, sir. So, can we start the session, sir?
How many participants?
Sir, we have total strength around 90, sir, and the 74 is present, sir.
90. कितने SNFA के कितने?
Please be online, sir. I'll check and confirm you, sir.
मोटा आइडिया 10 लोग 5 लोग कितने?
Around, sir, 5 to 10, sir.
5. Other are land building plant mission.
Yes, sir. Yes.
ठीक है, so I have to be very general. Okay.
Yes, sir.
ठीक है, done. Okay, friends. Very good evening, friends. Very good evening to everyone. See, I understand the audience belongs to land building plant machinery. Though this topic is for, I'm as SNFA guys, I would be covering the topic valuation requirements under various statutes. So you would get a more flavor on valuation requirements under S&FA for various statutes, but side by side I'll try to cover the land and building requirements or PPE valuation, you call it, property plant equipment, where it is required Ind AS valuation. That slide is also there, right? But more or less you get an idea that what S&FA people need, why there is a requirement for valuation reports and where it is required, what is the trigger point and those things, right? So it would be entirely new session for you. So I will try to make it as basic as possible. So if you see in security and financial asset, friends, there is an instrument, capital instrument, share equivalent. Shares are generally equity shares or other type of shares. Other means preference shares. And then you have debentures. So three things are there. Three things: equity shares, preference shares, and debentures. Right? So we have to talk about these three things. So if you see the first point here, equity shares. Unquoted basically means these are not listed on any exchange. These are private limited companies. Normal companies, not like Reliance, which is listed. I'm not talking about Reliance here, which is a listed company. I'm talking about ABC Private Limited, normal companies. Because if it is a listed company, then you easily get the value by looking at the share market. So the valuation need arise when a company is unlisted. So unquoted you call it. What is the instrument? Equity shares. Then other than equity shares. So आप देखिए, in cases there is a issue and there is a transfer. Issue means issue of equity shares by the company. By the company. So the money will go to the company in this case. In transfer of equity shares, it is a transfer between one shareholder to another shareholder. So the company is not involved here. Company is not involved. Money is not received by the company. Money is received by shareholder. Is this PPT visible to everyone? Yes, now I think it is visible. Right? Now I think it is. Yes. Okay. So I was talking about unquoted equity shares issue transfer. It is issued by company, it is transferred by shareholder. So money comes in the company in this case, money does not come in the company in this case. On both the occasions, valuation is required. We will see where it is required in the next slide. Then if a company is not issuing equity shares, it is issuing preference shares or debentures. Debenture is debt. Issue, transfer, same thing. And then apart from preference and debenture, there are other, instruments like warrants, preferential shares, shares with differential rights, other things, So it will be covered here. But we are more concerned about equity, preference, and debentures. Now, moving to the next slide, 1 point, 1.1, 1.2, 2 point, 2.1, 2. Next. Next slide is about 1.1. Issue of equity. Whenever there is an issue of equity shares, you have to see 3 acts: Companies Act, Income Tax Act, and FAME Act. IBC does not come into picture because company is not under insolvency. SEBI does not come into picture because it is not a listed company. Right? It is not a listed company. So only 3 acts operate: Companies Act, Income Tax, and FAME. So Companies Act is where registered valuer report is accepted. So where we have written RV report. So let's first complete Companies Act. RV report is accepted. It has to be IVS compliant. And it says shares cannot be issued below fair value. So whatever is the fair value you have determined, suppose you have determined 100 rupees per share value. So the transaction can happen above this price, but not below this price. Not below. So you fix the floor price. Floor price is fixed by the valuer. Whether the share is issued to resident or a non-resident. Non-resident means foreigner outside India who has a passport, citizenship. Report is mandatory, except in a right issue. Because in a right issue, the shareholding percentage does not change. So that's why it is not right. So this is regarding the company. It is a case of issue of equity shares to a resident to non-resident. Income Tax Act does not accept RV report. It only accepts CA report or merchant banker. MB means merchant bankers, CA means chartered. So if a company is undertaking a transaction of issue of shares, he has to take one report for Companies Act, another report for Income Tax Act, and third report for FAME. So they have to take 3 reports. 3 reports. And let us see how 3 reports will work. In Income Tax Act, this is the section which is applicable. This is the rule which is applicable. 11 UA 2A or 2B. Option to the assessor. Option to the company for any method. In Companies Act, valuer will decide the method. In income tax, company will decide which method is to be applied for which. This is a very big difference. In Companies Act, valuer will decide which method has to be. In income tax, the company will tell the valuer that I want this method to be. Only the method. Then the calculation is valuer is independent. Companies Act is very flexible. Income tax is rigid. They have defined the contours where you have to work. They have defined the formula also. If you want to use NAV method, use this formula. Take sign by CA. If there is a land building, no circle rate is required, book value can be taken. So land and building value requirement is not there in this case. Book value of land. If a company say I want to have a higher value, so I will go by DCF method, discounted cash. Here the report is signed by merchant banker. Merchant banker is a person who is registered with, competent authority, and he has a separate license for it. Now here it says share cannot be issued at more than fair value. So it is ceiling price. Here it says share cannot be issued below fair value. So this report is different. This report is different. Two set of value. So the value bound to be different. Suppose he give a value of 110 rupees per share. ₹110 per share. So ceiling price, this is floor price. And here it says issue to resident. Issue to non-resident is exempted. Only issue to resident is applicable. Right? So ceiling price, floor price is very important, friend. So if this floor price is 100, ceiling price is 110 in the report of another valuer, who is either a chartered accountant or a merchant banker, then the transaction will happen in between 100 and 110. Right? In between 100 and that, the second report from it. Third report is from the FEMA perspective. Regulation 11 talks about it. RV report is not accepted here. Chartered accountant or merchant banker. Chartered accountant or merchant. Here, the method which is to be used primarily is DCF. Is DCF primary. And it is only applicable when it is issued to non-resident. Because FEMA is foreign exchange. Foreign exchange only comes when there is a non-resident. Resident के case में तो foreign exchange आएगी. So only in case of non-resident. And it also fixes the floor price. So also fixes it. So generally, practically what happens is whenever a startup or a company is issuing the shares to both resident and non-resident, so he take one report from RV, और उसकी जो वैल्यू आई लेट्स से 100 रुपीज है, अब आर्मी के केस में he will generate the VRN. He is practicing as an individual RV, right? तो उसका इंडिविजुअल का लेटर हेड होगा और सेकंड रिपोर्ट वो इशू करेगा फेमा पर्सपेक्टिव से अंडर इज चार्टर्ड अकाउंटेंट फर्म लेटर हेड. फर्म जहां पे वो यूडीएन जनरेट करे, they will generate the UDN, but value and working will be same, the language will be different according to the act. तो उसमें भी वैल्यू उसके 100 आई because both are fixing the floor price. And third report he will take from merchant banker and merchant banker will fix the ceiling price. Let's say in our example 110 rupees per share. So 3 reports has to be taken for a transaction of issue of share to residents and non-residents by the company. Right? So this covers your issue of equity shares. Sections are there, method is there, floor price, ceiling price is there, and where it is applicable, it is written. In 5 pointers, everything is tried to be covered to complete the entire diagram for issue. Any doubt till now, you can put in the chat window. I'll right. See, 3 reports is required. Why? Because the question here is, here you have a ceiling price and here you have a floor price. Can the ceiling price and floor price will match your transaction price? Ceiling price. This is the contradiction. Right? That is the point of worry. That's why they require 3. Okay. Next, let's cover transfer options. Friends, when there is a transfer, is the company involved in transfer of shares? Is the company receiving any money? So report is not required. RV report is not required. Because it is a case of transfer of shares, equity shares. Now under Income Tax Act, for transfer you have a section 56(2)(10), where the rule is 11 UA 1 CB. And there in the previous slide, what it was? 11 UA 2A or 2B. Here it is 1 CB. One CB. यहाँ पे करेक्शन है, कर देता हूँ. 56:10 में you only have one method, NAV method, no DCF method. You don't have any option. Only NAV method. And here you require the report of land and building valuer for circle rate determination. Only circle rate, guideline rate you can, not the market value. Are you understanding? Only guideline rate, circle rate. Income tax accepts only guideline. That's why it is written. So CA report, because NAV method, DCF is not allowed. It is right. And here it is floor price. Here cannot be touched. In previous case, it was ceiling price. Now it is floor price in transfer options. When there is a transfer of shares, land and building has to be valued at a guideline value. Method has to be followed only NAV method. And the price is the floor price below which the transaction cannot happen. And it is applicable on every case. R to R, R to NR, NR to R. Any case. Share cannot be transferred. So if you transfer it below fair value, it will amount to taxation under section 56(2)(10). उसकी other sources में add हो जाए. So that's why the transaction cannot happen below the fair value. So you have to remember each word exactly. Is a case of transfer or issue. Issue है तो कौन सा मेथड लगा, कौन सा सेक्शन है, वहां पे सीलिंग प्राइस. अगर ट्रांसफर है तो एनएवी मेथड 56(2)(10) और यहाँ पे क्या है, फ्लोर प्राइस. So you require one report of a chartered accountant, NAV report under CA, under transfer of equity shares. And if the transfer is to non-resident or by a non-resident, if there is a transaction of R to NR, NR to R, then FEMA will also. And now the question is, if it is a transaction between NR to NR, will the transaction apply? Transaction will not. FEMA will not. क्योंकि इंडिया में तो पैसा ना तो आया है ना गया है. FEMA will only apply when there is an inbound or outbound investment or outbound flow, inbound or out. So NR to NR में तो inbound outbound कुछ हुआ ही नहीं ना. There is nothing. So that's why it is not applicable. R to R में वैसे applicable नहीं होगा क्योंकि ये तो normal transaction है. R to R, resident to resident, NRO account, NRO. R to NR or NR to R may you require. Now FEMA, the simple rule is, see, every country loves foreign exchange. Every country wants more and more foreign exchange. Now if a resident, suppose I am selling shares to a foreigner of an Indian company, let's say Reliance, or Reliance is then listed, let's talk about unquoted ABC brand. So government want that more and more foreign exchange should come. So they are fixing the floor price. And if the shares of ABC Limited is holding by NR, non-resident foreigner, and he is selling to me, so I would be making payment in foreign exchange. So government wants less forex will be. So they will be fixing the ceiling price. So two methods are two. Anyone can give the report, CA or MBA. And the method is DCF. I already do. So if you are doing a transaction of transfer of equity shares, so friend, you would be requiring two reports to complete the transaction. One under Income Tax Act, CA report by NAV method. And if company is operational, so DCF method. Another report by CA or MBA as per your wish. यहाँ पे दो रिपोर्ट्स आपकी लगेगी, एक NAV की और एक DCF. So we will be filing two reports. In issue there were three reports. Right? In transfer there are two reports for FEMA and for equity. Right? Lower or ceiling I have explained, section I have explained, circle rate value I have explained, CA report method I have explained, and this R to R and R to NR is this I have also explained. Right? Clear? Any doubt till now you can ask. So I covered issue of equity shares, I covered transfer of equity shares for 3 acts, Companies Act, Income Tax Act, and so any doubt till now you can ask. See, these are important slides, so I'm taking more time. See, my entire motive of taking a CPR is to give you something new. Even if the entire slides are not completed, it's okay, but you should get something new. Now I talked about the next, preference shares or debentures. So there are securities other than equity shares. In Companies Act, whether preference share is convertible, if it is convertible, either optional or compulsory, चाहे वो CCPS है, चाहे वो OCPS है, जो आपके स्टार्टअप्स में जनरली CCPS OCPS चलता है, right? At the time of issue, if CR means conversion ratio is fixed, आपने बोला 1:1 पे convert होगा या 1:2 पे, if it is fixed in the term sheet, then you require valuation report at the time of issue of that preference. If the conversion ratio is not fixed, suppose it is linked to a milestone, or if it is determined in the future, but in the future when we will convert, we will determine as per the circumstance prevalent. So you require valuation at two intervals, one at the time of issue, second at the time of conversion. There is significant gap in this. We have analyzed detailedly by reading share capital and debentures rules, prospectus rules, and act. You require a report if you want to fully comply with the Companies Act. You require a report at both the instances. Conversion के time तो आपको चाहिए ही चाहिए, because conversion is not fixed, तो आपको determine करना पड़ेगा, इसलिए आपको चाहिए. और issue के time चाहिए क्योंकि because the section talks about it. You require it because you are filling pass 3 when you are issuing CCPS. वहाँ पे आपको डालना पड़ेगी report attach करके. So both the occasions. Now, if the preference shares is redeemable, it is not converted, then you require report at the time of issue. Right? So this is for preference share, redeemable, convertible. That for that, section 55 talks about that. Section 55. If you read section 55, it clearly says section 55 is for preference shares, issue and redemption of preference shares, and for that it is 71. This is 71 and this is section 55. 55. If you read section 71, a company may issue debentures with an option to convert such debentures into shares, either wholly or partly, at the time of redemption, provided that the issue with an option to convert such debentures into shares shall be approved by a special resolution. Secured debentures, it is issuing secured debentures. तो सिक्योरिटी पे चार्ज क्रिएट कराने के लिए they need valuation charge certificate. If it is created a charge on property plant equipment, then you require the report of property plant equipment valuer. If it is a charge on current assets, you require an S&FA valuer RV report for creating the charge. Right? So if it is CCD, it is OCD, it is a pure debt, you require a valuation report from the registered valuer. Right? तीनों ओकेजन में आपकी रिपोर्ट रिक्वायर. Income Tax Act. So here you require RV report. Income Tax Act is the same as transfer, except the ceiling price. So now what is same as transfer? This is. Let's read this. So issue of preference shares or debentures. In that case, it is saying except this part, lower price. Everything is same. What is the section 11 UA1 CC? Not CB. CB is for equity. CC is for 56. There is an option in this case. CB में आपके पास ऑप्शन नहीं था, यहाँ पे ऑप्शन है. Any method, DCF, NAV or any other. So you are highly flexible. Here, CA or MB, anyone can provide. And all the cases are R2, R2. FEMA, same as equity shares. Same as FEMA ka to, I have already told you the concept I have explained, money in and out. So that will be applied to everything. Here also and here also. So same. And in transfer, I have told you company is not involved. So RV report is not. FEMA is same. Income tax I have explained. These rules are very important, friends. 1CC, 1CB, 2A, 2B. You have to read it very minutely to understand. So we covered transfer and issue of equity shares and other instruments, including preference shares, debentures, whether convertible or non-convertible. So these 3-4 slides cover all those things. Any doubt till now you can ask, because this have covered a lot of things. Issue, transfer of any kind of securities under income tax, FEMA, and company. Any doubt till now you can ask. This looks tricky, but this is very important sheet. These 3 slides, because whenever also we feel any doubt, we take out this sheet and look at it. Because when a client comes to you, he wants to understand the entire gambit. He wants to comply with the law of the land. So he must understand where which report is required, what are the compliances need to be done, where is floor price, where is ceiling price, which section. So that is what it is. Buyback, Naveenji, the CP is not about buyback of shares. So you can, we can discuss offline. So this is about, though valuation is required under buyback. So then this is valuation under the company, where it is required. Where it is required. What is the trigger? What is the reference? What is it? Read it once, you get clarity. For Section 8 companies, NPO company, not profit, non-profit organization. Conversion. Consideration other than cash, sweat equity, technical know-how. So right. This is primarily what we discussed. 62.1. C. 1C. Trend with 42 private placement. Issue of shares. These are other occasions where valuation is required. This is secured. Bonds are secured. Security charge. Non-cash transactions. Compromise arrangement. Merger amalgamation. Minority stake. Binding. Right? Now the IBC. So we covered Companies Act, FEMA, income tax. Now the fourth valuation requirement where arises of IBC. Insolvency and bankruptcy. Friends, In IBC, there are certain occasions where valuations are required. One or two occasions everyone is aware. This is normal. This is normal. This is normal. This is also normal voluntary liquidation. But look at this. 46.2. Undervalued terms. If RP has identified undervalued transaction, there is a need for valuation. So undervalued transaction को determine करने के लिए whether it is undervalued or not, you require a valuer report. There is a comes a valuation. How much undervalued? And in liquidation regulations amended recently, जो आपकी PUFE transaction है, preferentials, undervalued, fraudulent, extortionate, it is written that it has to be assigned for a consideration. Assigned for a consideration. So if you want to assign these transactions for a consideration, the liquidator needs some basis at which he can assign these transactions to someone else. And that consideration, that floor price is determined by the RV registered. That is also one more occasion. 7th point you can. These are normal. This is new. This is on fast track. This is okay. And this is new. 7th point. Assigning for a consideration, PUFE transaction. There the valuation is. Right. Now this is what I was talking about from PPE valuer's point of view, land building and plant. Ind AS valuations. There are companies where Ind AS is applicable, the large companies. And in those companies at year end, a lot of valuation work is generated. The revaluation of property, plant, equipment. Period. Financial instruments 109. Held as FETPCL. This is basically if you have investments in unlisted, unquoted companies, and you are under Ind AS, you have to get valuation done to check its fair value. To check its fair value for investments in unlisted investments. So this is year end you are testing. If it is investment in property, you need to appoint the land and building valuer to check its fair value. This is about investments. This is about fixed assets. Impairment testing, very common in COVID. Due to COVID, everyone was involved in impairment testing. So a lot of business is generated in COVID due to impairment testing. Superior and impairment indicators are available to COVID, which I told you. Superior valuation. ESOP friend, employee stock options. A lot of startups survive on ESOP to compensate adequately to the manpower. So they formulate ESOP policy. So at the time of grant, when they are granting the ESOPs, when they are giving the ESOPs to them, option, they require, so basically in accountings, they have to book the employee compensation expense. For that, they require ESOP valuation, employee stock option valuation. At grant dates, valuation date is the grant date. To check employee to book their expense in their books, because this is an expense to the company. Just like salary you are paying, you are giving them ESOP. If a company is worth, let's say, 100 rupees per share, and you are giving 10 rupees, you are collecting 10 rupees for ESOP. So 90 rupees you are giving to your employees in a way. So that expense has to be booked. So how do you get this 90 rupees that has to be disbursed? So 102 is a share-based payment where these ESOPs and SAR accounting. SAR is basically the appreciation rights you get. कि अगर मेरा शेयर आज 100 रुपए से 200 हो गया, तो my employee should also benefit. So there, जो 100 rupees में benefit जो हुआ वो आप दे रहे हैं, that is your expense. So that is to be booked over the period. So that's why you require values. So it seems tricky for line and building plant machinery valuer, but ESOP you understand. For that, valuation is required whenever it is given to you. Business combinations. One company acquiring another company. They are merging, joint venture. So there, those valuation opportunities arise. Non-current asset is generally not meant for sale, but if it is held for sale and discontinued operation, this valuation has to be required so that you can fix the floor price. So two types of valuations are required at time of classification and at year end. Then the leases, employee benefits plan, which is your generally those gratuity, leave encashment, actuarial valuation it is total. This is actuarial valuation. Actuary's valuation. Gratuity, leave encashment, those. Government grants, accounting के लिए, agriculture, this is very rarely used. So a lot of occasions are there where valuation is required. FEMA we have covered. This is mentioning the activity and the trigger point. Transfer of shares, transfer, disposal of shares. See, basically, FEMA is simple. If there is an inbound or outbound valuation, or if there is a swap, this is a case of swap. Buyback is there at the time of buyback. Foreign shareholders are there, companies buy back its shares. Just like TCS did recently, buy back the shares. So they are taking shares from the shareholder, cancelling the share certificate and giving money to the shareholders. So it is a way to distribute money to the shareholders. Well, then these are income tax sections which are listed. Where the valuations are required. See, in those first 3-4 slides, we talked about issue and transfer. And there he is elaborating section wise where the trigger point, what is the activity, is 56.210 transfer, 50 sale of shares in a listed company transfer, 7B issue of shares. ESOP ग्रांट जब हुआ आपका तो आपको कंपनीज एक्ट में रिपोर्ट चाहिए. ESOP जब आपका वेस्ट हो गया, when ESOP is vested and when ESOP is exercised, एक्सरसाइज जब आपने कर लिया, वेस्टिंग में कुछ नहीं चाहिए. एक्सरसाइज में आपको इनकम टैक्स में वैल्यूएशन करवानी पड़ेगी, परक्विजिट्स की वैल्यूएशन. और जब आपने सेल कर दिया तो ऑब्वियसली वो आपका शेयर बन चुका है, इक्विटी शेयर, उसकी वैल्यूएशन की आपकी रिक्वायरमेंट आई जाएगी व्हेन दिस इज सेल. So it will be covered under this. Then this is transfer pricing, 90 arm's length. Slump sale also, friends, you require valuation. There is a specific section, section 50B. Slump sale simply means कि आपकी कंपनी में 10 एसेट है, लैंड बिल्डिंग भी है, प्लांट मशीनरी भी है, इन्वेस्टमेंट्स भी है, स्टॉक भी है, सबको आपने इकट्ठा बेच दिया, लेट्स से 90 रुपए में बेच. तो दिस इज स्लम्प. तो यहाँ पे सेक्शन 50B में इनकम टैक्स के हिसाब से वैल्यूएशन करनी होती है. और जिस बंदे ने 90 रुपए में खरीदा है, अपनी बुक्स में इस 90 को एलोकेट करने के लिए उसको रजिस्टर्ड वैल्यू की रिपोर्ट चाहिए. Right? Then these are the requirements under CEP where the valuation is required. CEP comes into picture when there are listed securities. Generally क्या होता है, आपका infrequently traded shares होते हैं, frequently traded, their valuation arise. और otherwise लेडोर के केस में, लिस्टिंग ऑब्लिगेशंस के केस में, रेटिंग्स, क्वार्टरली NAV, SAST regulation takeover. Under SDR. So these are the occasions where valuations are provided. CEP, annually, half yearly, or whatever. Specific regulations are there, if you see. Infrastructure trust, INVIT. This is INVIT. INVIT. Real estate investment trust, REIT. This is REIT. So a lot of REITs require valuation to be, if they are purchasing any project at the time of transaction, selling they require. Then half yearly public issues, NAV publication. AIF, there you generate a lot of business. Category 1, Category 2, AIF. Half yearly they have to report their, their portfolio fair value. तो फेयर वैल्यू निकालने के लिए अगर इन्होंने 100 कंपनियों में इन्वेस्ट किया हुआ है तो इनकी 100 की 100 कंपनीज की आप वैल्यूएशन कराएंगे हाफ ईयर. Right, friends? So I have tried to cover a lot of things here to get you an idea, because this PPT I'll obviously share with you. This PPT will be shared with you, so you get an idea where the valuation is required. So if you have any doubt, you can ask. And this PPT I'll share it by tonight to Mohit, and Mohit will circulate it to you in the book. So you can use it for your future references. Right? So if you have any doubt, you can ask, otherwise we'll wait. Mr. Sudhakar, you want to ask something? Your hand is raised. Okay. So thank you, friends. Thanks a lot. Mohit, if you are there, you can take over.
Yes, sir. Good afternoon, sir. Are you done with the session, sir?
Yes.
Yeah, thank you so much for the session, sir.
Thank you. Mohit, I'll share the PPT to you.
Yes, sir.
The email ID is CEP.
Yes, sir. Yes, sir. CEP at IOV-RVF.org, sir.
मैं भेज देता हूँ रात को, आप circulate कर.
Yes, sir. Yes, sir. So once again, thank you so much for the session, sir. And thank you all the participants for joining us. Thank you, sir. Thank you, members.